Welcome back to Arise Exchange. You can bet all eyes are on the Fed as it considers whether to raise interest rates next week. Recent economic data suggests the economy is headed in the right direction, but how long will it last? Well, Jim Awad, Managing Director of Plimsoll Mark Capital, joins us now. Always good to see you here on Arise
Always
Exchange,
my pleasure.
Jim. We've got housing indexes up now for strong for the last 18 months. I would assume that we're going to see this continue down the road, do you think?
Yeah, the issue with housing, look, it's benefiting from the fact that the economy is getting better. Payrolls and employment are growing. The absolute number of people working, although not wages yet. The problem that housing is going to run into is the lack of supply, the fact that it's still hard to get a mortgage, and that incomes aren't growing as fast as the price of houses are. So housing will continue to recover, but not at the rate you would expect with this much economic growth that we've had.
All right, U.S. house prices were flat in February.
But over the last several years, what I'm talking about, there's been a huge increase in prices since 2009, and they've gone up much more than incomes and wages have at that point. So that's just going to be a headwind. I expect housing numbers to continue to be good and to grow, but not as much as you would have thought at this point in the economic cycle, because wages haven't grown and because prices are up so much and because mortgages are still pretty tough to get.
Okay, yeah, they are pretty tough to get, even though interest rates are still low. The question is housing starts, new housing starts. What's going on with that?
Well, builders until recently have been cautious because they weren't sure what the demand was going to be, and they got hurt in the crash. And again, starts are a fraction of what you would expect if you hadn't had the crash, but they are growing and should continue to grow.
Okay, and concerning interest rates, I'm saying all eyes are on this. They are very low now, even though it's really hard for a lot of people to get mortgages.
Yeah.
What happens, Jim, if they go up significantly?
Okay, well, they shouldn't go up significantly. This looks like an elongated, slow growth economy rather than an overheating economy that would lead to inflation. So I expect the Fed to raise short-term interest rates somewhat, but very slowly and cautiously. And I would not expect long-term interest rates, which control mortgage rates, to go up much because rates overseas are so low. You've got the German rate so low, the Italian rate, the Spanish rate, the Japanese rate are all so low. So I think that overseas investors are going to want to buy U.S. Treasuries, which should keep long-term rates low, even as the Fed raises short-term rates, and that should cushion housing.
Of course, it's good that the dollar is strong right now, quite surprisingly in some people's eyes and some experts' eyes, and that's a good thing for us. But the question now is with the banks. With the interest rates being low, when are they going to loosen their grips for consumers who want to get mortgages?
Well, the banks are under a severe regulatory situation now as a result of the crisis, and the regulators are constraining their growth. So they're acting very cautiously and prudently, and I think that's going to continue to be a headwind. And where you're seeing it mostly, first-time home buyers, who typically make up 35 or 40% of the market, are now less than 30%, because even though they're getting jobs and starting families, they can't get that first mortgage.
Okay, we got less than a minute left here. I just want to switch over to the roller coaster ride, and the stocks are up, they're down, they're all over the place. What do you see going on?
Well, it's been a trading range for a long period of time. We're in the middle of earnings season, and I would say that earnings and revenues are probably just good enough to allow us to break out on the upside, but not by a huge amount. I expect mid-single-digit returns for stocks this year. I think stocks will go up as much as earnings, which are about 5 or 6%.
Lastly, I know you don't want to talk politics here. Do you think the economy will hold for the 2016 elections?
Yes, I do. And I think that we are so early in the political process that anything can happen politically. But the answer on the economy, I think it'll be doing as well, not better or not worse than it is today in terms of growth rates for the election.
Okay, Jim Awad, we've heard it first from you, and of course the best. Thank you so much for joining us.
Always my pleasure.